Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Head of Research and Managing Director at Red Cloud Securities, and I'm delighted to host another Red Cloud webinar on uranium today. We are going to hear from CanAlaska Uranium President and CEO Corey Bellick. Now, during today's webinar, he will provide an overview and outlook. Then we will take your questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During this CanAlaska webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on page 2 of CanAlaska's corporate presentation, and that can be found on the company's website, canalaska.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on CanAlaska Uranium. So Corey, with that, why don't you take it away, sir?
Well, thank you, David. It's a real pleasure to be here today, and thank you to Red Cloud for hosting us. It's always great to start the year off with what is usually our first webinar and presentation on our normal marketing route. So real pleased to be here today, and the theme we're going to really focus on is Pike Zone, West McArthur, and really beyond West McArthur, and I'll talk a little bit more about that in a few moments. We do have some very ambitious plans in 2026, focused on Pike Zone, but we have other things that are really high priority within our portfolio that you would have seen just today, in fact, in the news, and we'll touch on some of that and why it's important for Catalyst, for CanAlaska moving forward. So without further ado, I'll just get into it, and again, really great to be here talking about CanAlaska and its 2026 plans. Of course, I will be making some forward-looking statements, so please note that. So just to recap 2025, we did have some incredible success at our Pike Zone on our West McArthur project, located right next door to Cameco's giant McArthur River mine. We continued to expand the high-grade uranium footprint that we were working on in 2024. We drilled very, very high-grade, ultra-high grades of uranium, grades up to 85.4% in several samples, just proving the endowment, the possible endowment of this system. Incredible grades, things you only see at the very, very highest grade unconformity deposits in the Athabasca Basin model. Exceptional stuff. At the unconformity and in the upper basement, which is our focus as we work along the Pike Zone trend. So we did expand that mineralizing system to now 500 meters of continuous mineralization, open on both ends, for really several kilometers total strike length without a single drill hole. So really, really great results from our 2025 program. I will note the summer assay results are still pending, but I would suggest are imminent. And before I move on, this is part of a portfolio of over 500,000 hectares in size, or over 1.2 million acres. And in terms of West McArthur, CanAlaska owns 88.86% of the project now, and Cameco owns the residual interest just over 11%. So in terms of 2026, where will we be working? Well, it will be West McArthur extension. That will be the focus, and beyond. We've got several other projects we want to tackle, highlighted here on the map on the right. All of those other projects are 100% owned by CanAlaska. So our focus will continue to be the Pike Zone on the West McArthur project, the very prolific C10 South corridor, extension focus to that mineralization. We're going to seek ultra high grade pods or pearls along strike at the unconformity or the upper basement, and continue to expand this target. We will be completing at West McArthur some new geophysics on the Ep Lake corridor. This is one of the superconductors in the Athabasca Basin, and some of that conductor from work 20 years ago did contain anomalous trace metals, anomalous uranium alteration, and we believe that there's untapped opportunity along that Ep Lake corridor. It's in the far northwest of the West McArthur project, but we're going to move that forward with some new geophysics and see if we can develop a target there that is really running in parallel to the C10 South corridor. Now, beyond beyond West McArthur. We've got work ongoing at the Key Extension and Nebula projects south of the Key Lake Mine and Mill, just immediately south along that road, just south of the mine. We're going to be working at Cree East, developing targets there, and also our Waterbury South project, which has sat dormant. It's just 10 kilometers away from the Cigar Lake mine. We'll look at those historical results where we drilled some amazing alteration and key indicators to a Cigar Lake type mineralizing event. So again, these other projects outside of West McArthur, 100% owned by CanAlaska. So again, we put the CanAlaska advantage out there. We believe the right strategy, the right team, and the right assets, put those all together. Tier 1 jurisdiction, Eastern Athabasca Basin focused in and around all of that critical infrastructure that is around McArthur and Key Lake in particular, let alone Cigar Lake. Get the right team on them. Cameco and Orano trained geoscientists sort of leading this incredible team that we have here at CanAlaska. Really leaders in the space in terms of uranium discovery, certainly in the Athabasca Basin with a great track record of discovery, including the Pike Zone now. And then put them on the right assets. So right geology, right land position, right partnerships, Cameco, Denison, or Moon Lake South JV is an example. In a well-structured and well-financed vehicle, it is CanAlaska. And here it is. So as of January 9th, share price of 68 cents. Outstanding shares, 219.86 million. Importantly, almost 39 million in the treasury after our successful raise in Q4 of last year. So we are very well capitalized for everything we want to do in 2026 and really well into 2027 if we so choose. No warrants outstanding anymore. Those are all cleared off the deck, so there's no warrant overhangs. Management owns about 4% of the stock and fully diluted pushing 11%. So we are aligned with shareholders, and the price is on the move. I think today it's up around 75, 76 cents, so even higher than it was just a few days ago. We look forward to an incredible 2026. Corporate analyst coverage, still led by Cormark, Red Cloud, and Desjardins. So thank you for that, David. And please reach out and get the analyses from these various groups on the possibilities for CanAlaska in 2026. Myself in the space, for those who don't know me, over 30 years in nuclear, most of that with Cameco, the last 7 years as of yesterday, with CanAlaska leading this team and regrowing CanAlaska into the company that it is today. On the technical side, led by Mr. Nathan Bridge, VP of Exploration, very talented geoscientist, comes from the Cameco system, known Nathan a long time, and he's really been working hard to get this team down the right technical track, and I would say down into the discovery of the Pike Zone. Just a fantastic individual to lead this technical team at CanAlaska. At the board level, led by Karen Lloyd, former Cameco Director of Marketing, very well versed in the uranium space, very knowledgeable, very pleased to have her as chair. Again, some recent additions. Jeff Gay brings connections into the Indigenous groups in the North where we work, and Shane Shercliffe, a more recent addition, again, former Cameco Director of Corporate Development. So again, a very well-versed team in the uranium space, both technical and political strength involved. So, the bull market, it's underway. I mean, since 2020, it's been on the upswing. Yes, a little bit choppy, sawtoothed here and there, but I would argue we're well over $80 a pound now on the spot price. It's looking good. It's looking bright. The trend is in the right direction. Still not far enough to incentivize sort of that tier 2 production that we see out there. It needs to be north of $100 a pound in our view, and we're not there yet. So there's room to move in this market. If we look at term pricing, well, this is nice. It's moving along with the spot price upward. In fact, 5-year term prices are now over $100 a pound. We haven't seen that since 2024, almost 2 years ago now. And that's when the uranium price really started to run. So these are all the right signposts. Term pricing is one of the keys, and it's on the move upward along with spot price. Everything is looking great. Long-term fundamentals really have never been better. This is from WNA. This is their sort of middle of the road reference scenario, and they're short, 165 million pounds estimated by 2040. If you look at the at-risk category there that I've paired out, the planned and prospective mines, the price isn't there yet to make these economics. So are they at risk of not filling that stack as forecast here? I would suggest probably so. And if that's the case, you could be short north of 200 million pounds by 2040 on an annualized basis. That is a huge amount of uranium to be short when the need is today to know what is actually going to produce in 2040. In fact, I would guide the attendees here to Grant Isaac's recent Smith Weekly Research, episode number 419. I would recommend. That's a great listen. It talks about this very scenario. A lot of this may or may not come into play. And of course, within this stack, we see Cigar Lake coming off at around 2036, 2037, which is well known now. But also not included in this chart is McArthur River coming off somewhere in around the 2042 range. So there's a lot of pressure here coming in the next, say, 5, 10, 15, perhaps even 20 years. It's all going to have to come from somewhere. So we start thinking about that. I know this is small, but I'll let digesters digest it as they may. This is from the WNA report, and this is that development planned and prospective list. And I would dare say many of this, is at risk of not coming into play at today's uranium price. So the uranium price simply has to increase. Then you interject jurisdictional risk. Some of these are in jurisdictions that are risky. There could be changes there. Technological advancements might bring some forward or might lead to some of these coming off as well. Is there something we don't know? These are all question marks, but what it does is it introduces risk to that stack of production out to 2040 included in the WNA's forecast. We need new discoveries today. If we look at the potential, here's the list from that report, the potential. Are they coming? Oh, maybe, but within that stack, what will it take to accomplish this production by 2040? Few, if any of these, are in the pipeline of consideration for 2040 that could offset the prior at-risk list that we talked about. So at the end of the day, we need new discoveries. We need new discoveries that are tier one. We need new discoveries that make money in today's environment of $80 a pound. Most of these on these lists are up north of $100 a pound, I would suggest, at the least. So there's a lot of movement here that has to happen and stabilize in order to get these into that stack pipeline. So this is where CanAlaska comes in. We need new discoveries. So we are an active explorer and project generator. We're constantly generating new projects, those projects that we feel very highly about, that we want to deploy our shareholders' capital in. Again, almost $40 million in our treasury today that we can deploy into this set of assets. We do so. It's all driven by research, acquiring land, doing deals, going out and making discoveries. Again, it's a portfolio of over 500,000 hectares or over 1.2 million acres centered in the eastern Athabasca Basin. And that's critical around all that key mine and mill infrastructure owned by Cameco, Orano, and Denison. So this is where we're focused in 2026. Again, the eastern Athabasca Basin, but really the southeastern Athabasca Basin. So in 2026, we're going to be working on our West McArthur project. We're going to have some joint venture work with our partner Denison, our Moon Lake South JV. We're going to be working on our Key X extension, Nebula, Waterbury South, and Cree East projects, all in the eastern Athabasca Basin. Key to note here at West McArthur, we announced this about 10 days ago. It's a $15 million program for 2026. Cameco is now co-funding the West McArthur project. We're very happy to have them back as a co-funding partner at our West McArthur joint venture. Moon Lake South will see some geophysics done. Key X and Nebula, or Key Extension and Nebula, we will be starting drilling here in a few weeks' time, so stay tuned for those sets of news releases. We will be drilling some incredibly good new priority targets in this winter at our Key Extension and Nebula projects, again, located just south of the Key Lake Mine and Mill. Waterbury South, located near Cigar Lake, we're doing some geophysics to reset ourselves for the next set of drilling that we'd like to accomplish there in the coming years. And then Cree East, we're going to do geophysics, and then from those results, see if we want to tackle any drilling in the summers, but those decisions will be made a little bit later. And again, we're always looking to add to this portfolio through staking and or bringing in partnerships through deals. So let's get into West McArthur and our Pike Zone discovery. Many are very familiar with this, located about 10 to 12 kilometers due west of the giant McArthur River mine, the world's richest uranium mine. You can see here on the right, all that critical mine and mill infrastructure, the haul road shown on the right down to the Key Lake Mill. We are that close. We can work here year round, high and dry to access it. We can drive right into the Pike Zone target area with vehicles at almost any given time through the year. And again, the C10 South Corridor, part of that prolific C10 corridor, already hosts to Cameco and Orano's Fox Lake deposit, 68 million pounds of almost 8% uranium, very prolifically mineralized corridor. We are on the right geology, just amazing results coming from this project. So let's look at last year. So what did we accomplish? Well, we accomplished infill work. Again, to your point, to David's point that was made here, we infilled the Pike Zone. We had 250 meters of connected mineralization as we entered the summer, and our objective was to extend it in both directions, both to the east and to the west. through that summer program. And that's exactly what we accomplished. We accomplished moving to the east. We still see alteration. We maybe have lost some of the mineralization, but the fault's present, alteration's present. We don't have any drill holes really for about 600 to 700 meters to the right or to the east. And we connected the mineralization now at our target at the unconformity to over 500 meters, of which 140 meters are these ultra high grades, like that 85% material that we've shown through last winter, and completely open to the west. This is a large mineralizing event, 500 meters already in strike length and growing. This is what it looks like. One of the things that we saw late in really September, late in the summer, was the western end of this 500 meter mineralized corridor that is part of Pike Zone looks every bit like what we see about 10 to 13 meters away from those ultra high grades. So the image on the top here, the core image, is from the sort of eastern end of the ultra high grade Pike Zone portion that we've drilled to date. The image on the bottom side is the unconformity target on the immediate western end, the stuff that we drilled in September. This is why we're excited to get back here in January. Everything looks like it's improving to the west. We're starting to get grade coming back. We've got the alteration present. It looks every bit like what we see just a few meters away from the ultra high grades. This is the focus of January, getting out here on the western end and extending this target in that direction. It looks to be improving in alteration. The structure is present. The mineralization is coming back at and around that unconformity, exactly like what we saw before we drilled those ultra high grades last winter. So we're very excited to get back in here and get moving this project forward in January. So just to put this in context, this is McArthur River. We've talked about this before, but it's made up of 6 zones of mineralization, or really 7 zones of mineralization separated by up to a few hundred meters of what we call barren structure, perhaps altered, but barren, no uranium, or very little uranium. So we should be expecting pearls on a string to be forming. That's exactly what we think we're having at our Pike Zone. So to put this into context of what we believe or where we are in the process of evaluation of Pike Zone, this is really it. So that 140 meters represented by the darker blue here at this scale shows something, equivalent to any one of the zones at McArthur River. And then the lighter blue is the area that we've actually tested, that 500 meters of strike length so far. Again, all mineralized, looking for that next ultra high grade pearl or pod that mimics something like a McArthur River. This is the stage we're at. So when we came through the summer, we drilled mineralization, yes, not ultra high grades, but the alteration was present, the structure's present. Very end of the summer program, we're starting to see the grades come back that we see adjacent to the very high grades at Pike Zone, or the ultra high grades. This has the team excited to get back out here in January and get drilling on this target. We've got a ways to go. Drilling gaps is part of the game here. You can look at any number of deposits or the mineralizing systems in the Athabasca Basin in and around that unconformity. This is what they look like. They're pearls on a string. You've got to drill some of this string to get to the next pearl. And that's what we've been up to last summer. And that's where we believe we enter 2026. In terms of scale, just to refresh the memory, Zone 2 at McArthur River, which is host to 350 million pounds of uranium, is about 80 meters in strike length, 20 to 25 meters wide, and up to about 60 to 70 meters into the basement. The footprint of something like that fits in the space of a North American football field. 350 million pounds of uranium. That is very small, a very small target, very high grade, and at 85% grades, it doesn't take long to build pounds quickly. So we just look at that in the context of what we're trying to do in 2026. This is our focus as we speak right now, this week. We have one drill that's going to be working on sort of infilling part of that 500 meters where we have a gap of almost 100, 125 meters untested by drill hole, yet mineralization on both ends. We're going to have one drill working to the east, no drill holes for at least 500 meters, but alteration's present, the structure's present, trace chemistry's present, so we need to work in that direction, but importantly, moving to the west or to the left. And there's no drill hole there for almost a kilometer, but yet the westernmost holes at the very edge of that 500 meters of mineralized corridor, again, look every bit like what we see right adjacent to the ultra high grades that we drilled last winter. And just for scale here, I put that footprint, that 80-meter footprint in that red box, sort of middle center of that image, just for context, the scale that we're working at. There is a lot of opportunity here to find pearl or pearls of mineralization along this mineralized corridor, and that's in fact what we intend to do this year, is look for those fairly aggressively with the 3-drill program. Just to expand on that, because we do look outward beyond, say, 1,000 meters of footprint in that image, we have 4 kilometers of target area here. We announced this a few weeks ago, or actually it was before Christmas. We have about a 4-kilometer zone of structural complexity connected to Pike Zone mineralization, and specifically moving to the west, another, say, 3.5 kilometers of some amazing looking structural detail that came out of our geophysics program from last year. So this is a great result. This is, again, what we'd anticipate in such a system as McArthur River, for instance, where you get the structural complexity over a segment of one of these corridors, producing some incredible grade mineralization. So everything, again, is looking correct for a very large mineralizing event to be occurring in and around Pike Zone. So this is a great result from our geophysics. Gives us even more impetus to get out here and continue to develop this target fairly aggressively. These are the drills sitting on the drill pads. The actual second drill is sitting way in the background. This is just from just a few days ago. The drills are up, they're running. We're ready for first results in a few weeks' time. It's looking pretty good. We've got other things on the go. So we talk about other projects, things beyond West McArthur. Cree East, we're going to do a round of geophysics there in the winter. This is work that we should have done ahead of last year's drilling program that was funded by Nexus. We're now in full control of this project. We've got it back 100% unencumbered because Nexus chose to move on in their business model and do other things. So we're going to do the preparatory geophysics that we see as value add here to get to that next round of drilling and hopefully get into the next mineralization on the Cree East project. Again, we'll evaluate summer drilling potential once we're through the geophysics in the winter, and we'll determine the next steps and report to market at that time. Just to refresh the memory, Cree East, this is why we're very high on the project. On the left here is the ultra high grade mineralization from our Pike Zone at West McArthur. Note that top row of core, that is the sandstone. It should be bright colors. It's not, it's gray, completely altered. It's what we see immediately adjacent to those ultra high grades. In this case, 5.5 meters of 37%. Actually, that turned out to be closer to 50%. What we see on the right here is the fresh core drilled by Nexus on the Cree East project. You can see the core is gray. That's the sandstone. It's gray. It's bleached. It's broken. Trace chemistry is present. All been reported to market. This looks to be every bit like what we see adjacent to some of those grades of McArthur River. So we're very much looking forward to getting back to Cree East after we get that geophysics done and properly evaluated, and then set up the drill targets to actually go out here and do more drilling, chasing this target down. It looks great. Nebula. This is immediately south of the Key Lake Mine and Mill. It's actually about 35 kilometers southwest along the geological corridor that is host to the Key Lake deposit, as well as McArthur and others. It's all the same rocks in the basement. This is the first drill program by CanAlaska into this target. 2 priority target areas totaling 20 kilometers as total strike length have been developed with our recent geophysical surveys. These geologic features, this conductor on the right here, that sort of S shape to it, classic stuff that you'd see associated with the Eagle Point mine. Cameco's Eagle Point mine in the northeast part of the Athabasca Basin, where I spent 5 years of my career as chief geologist. This target looks identical to that, and it literally doesn't have a single drill hole into it. So we're really looking forward to getting out here in a few weeks' time, drilling this target with the very first drilling conducted by CanAlaska. Of note here, the Karpinka Lake boulder train remains unexplained. You got boulders down there and float up to 35% uranium, immediately down ice from the yellow circle that I highlight here, which just happens to be the best looking target area in this conductivity on this Nebula project. Again, no drilling. First drilling coming in a few weeks' time. I really like this target. This looks correct for a basement hosted deposit like Eagle Point. Just north of that, we've got our Key Extension project, just 18 kilometers southwest of the Key Lake Mine and Mill Complex. This will be the second drill program conducted by CanAlaska. The first program in 2023, 3 years ago now, intersected the right rocks with graphite, that critical graphite you find in the basement, with the right structure, the alteration, anomalous geochemistry, and uranium enrichment. The very first drilling program a few years ago that we conducted intersected things of interest. We're really excited to get back here again. Of note, the Orchid Lake Boulder Train remains unexplained, and up-ice drill targets exist, which will be part of our winter program this year. So we've got a lot on the go south of Key Lake. Priority targets, relatively untested to completely untested, just developed in the last, say, 12 to 18 months, and now we're getting out here and drilling these for the very first time. So fantastic set of catalysts coming for CanAlaska and its shareholders as we work through these very high priority projects south of Key Lake. Now, one that we worked on back in 2022, the Waterbury South project, which is located about 10 kilometers east-southeast of the Cigar Lake mine. Again, same geology. We drilled this in 2022. We had strong uranium enrichment, 400 ppm uranium in the lower sandstone, intense alteration in the sandstone and basement as well. Coupled with that enrichment was strong nickel, cobalt, arsenic mineralization, Cigar Lake style, these polymetallic ores. We're getting up to 2.5% nickel arsenides. 2.5%, that's what you see associated directly with the Cigar Lake polymetallic uranium mineralization, that incredible asset of Cameco and Orano's next door to us. It looks right, but what we don't have is modern geophysics to extend this target in both directions. So the focus here in the winter is to complete that geophysics and set it up for the next round of drilling whenever that may occur. But we need modern geophysics here to take this target further and effectively drill test it at some point in the future. But again, great asset, great mineralization at that unconformity and great alteration associated with it. Looks every bit like a Cigar Lake analog. Really excited to get back here on this target as well. And of course, we do have project generation beyond the projects we're going to be actively exploring with geophysics or drilling that we've just walked through. We will continue to add land to our portfolio. We've done a lot of deals. I think the total here at one point was 44 million in the last number of years. Of course, Cree East was returned to us fully unencumbered after $3.5 million of work, and some stock and money came our way, which is doing quite well these days. So that's a good part of our project generation business. Constellation, first round of drilling there, hit the right rocks, hit some alteration, but the project couldn't get funded, so we got that back unencumbered. Waterbury East is moving to JV after the first successful drill program on that project, again not far from the Cigar Lake mine and mill. So we got a lot on the go. We continue to do deals, and we've got lots of land here available for others to participate in. I won't spend too much time on this slide. We've used it before, but I think what is well known now is that in and around 2042, McArthur River, as it stands today, will be out of ore. So we need to be thinking, 15, 16, 17 years out as to what is going to feed that Key Lake mine and mill. And this is where CanAlaska's portfolio really comes into play, is to help backfill with a hopefully tier 1 asset or a Pike Zone or elsewhere, the ability for Key Lake to produce uranium. So we believe that we are providing a forward value proposition to our shareholders that is really exceptional, specifically in that eastern Athabasca Basin. And if you follow the path of NextGen, taking it to 240 million pounds at say 2.5% U3O8, they're now a $10 billion company and looking to produce uranium from the western part of the Athabasca Basin all the way up to Cameco's 66 billion, perhaps more today if I looked at the share price. But nonetheless, we believe West McArthur is entering that very early stage in discovery where you create a lot of value with continued success, which we hope to do in 2026. And then we had all the signs of it in September of last year that we're on to that next possible pearl on that western end in particular. So we believe that we're at the very early stages of this rapid valuation trajectory for our shareholders. It looks correct, feels correct, and now we've got Cree East coming in that pipeline, advancing it with the work that we did with Nexus last winter, and now that we're going to do this year. And then we have things like Waterbury and the Key Lake projects starting to come along as well as we enter the first drilling programs just south of the Key Lake mine and mill. So a lot on the go in 2026, again, focused on Pike Zone, but certainly looking at our other projects with high value targets ready for testing. And so we do have a lot of drilling catalysts coming in 2026 for our shareholders, a lot of work at West McArthur, both winter and summer, Key Extension and Nebula, both running through the winter as well. So really 4 drills turning on, say, 3 projects at this stage over the next 3 to 4 months. A lot of news flow for our shareholders, a lot of discovery opportunity. And then as we get into the summer, we will be drilling at West McArthur as part of that $15 million co-funded program with Cameco on that joint venture, again, advancing the Pike Zone. And then the winter results in geophysics and drilling in the case of Key Extension Nebula, will determine other drilling programs that might be considered in the CanAlaska portfolio for the summer. So we'll report those once we have more line of sight on what we want to do. So no doubt, drilling on discoveries and target generation always ongoing, and prepping for that next round of catalyst drilling that we envision in our portfolio. So we truly do tick all the boxes. We do. And importantly, we are advancing an ultra high-grade uranium discovery on our West McArthur joint venture with Cameco at our Pike Zone ultra high-grade uranium discovery. So with that, maybe I'll just welcome shareholders to join us for that discovery journey. We truly have an upsized program in 2026 that provides a lot of catalyst and a lot of opportunity for our shareholders to do fairly well through continued discovery within our portfolio. So thank you, and happy to answer some questions.
As always, very informative. So we're now going to start the Q&A portion of the webinar. Reminder, everybody online, you can type your questions into the chat box. We already have several questions here, Corey. I guess Cameco has decided to fund the project again. Great stamp of approval, in my opinion. But just to clarify, this project has been a JV for several years, despite that Cameco hasn't been funding. And ultimately, does this mean now that CanAlaska will not gain more than 88% interest in the project?
Well, yes, this has been an active joint venture with Cameco since about 2016. I was on the Cameco side doing the deal with the former CEO at that time to get Cameco involved because of everything that was happening at the Fox Lake deposit nearby. And Cameco went, look, we got to get involved with CanAlaska. We love the geology. It's trending onto the property. Let's get in there. So that's about 10 years ago now. They did some work, found 42 zone, and of course, then they shrunk their exploration budget from 110 million globally down to sub 10 in a matter of about 12 months. So it shut everything down. So that's when CanAlaska came back in, sort of when I joined the company 7 years ago now, is to take that back on and start being the operator again for the West McArthur joint venture in a majority position. And that's when Nathan joined me shortly thereafter, rebuild the team and carried on. So while Cameco was sort of getting themselves reoriented with their budgets and their plans for exploration, we advanced the project, and through that process gained interest up to our current 88 and say 89% ownership. Now within the joint venture, Cameco had a decision to make. Do they sort of give more interest to CanAlaska, or do they co-fund and move forward? Well, the results that we talked about in September on the western end of the Pike Zone, I would suggest our partner felt very strongly about, to the positive, and it looked like we're getting into that next pearl. So it perhaps made their decision easier to actually start co-funding again and retain their interest in the project. And we're very glad to have them on board. They've always been a good partner with us. They've always been right there by our side, despite not funding. They still do their 3 to 5 visits a year and look at all that we look at, and they get all the raw data, and we talk back and forth through our meetings. So it's been a very good joint venture. And we look forward to having them co-funding because it does provide us the opportunity now to deploy some of our capital that is now covered by Cameco into other things like Key Extension Nebula, and provide more opportunity for discovery to our shareholders. So very pleased to have them back in. For 2026 at least, based on their decision, we will not be gaining more interest than ours, about 89% in this project. But again, happy to have Cameco involved, happy to have them as a partner, and as you suggest, it should be viewed positively that they are reinvesting in the asset that is West McArthur.
Now their back was up against the wall a little bit here, right? At what point would they have been converted to just a royalty or something like that?
Well, that trigger point for the process within the JV, and I won't get into the nuances of the legal side, but essentially 10% was the limit. So they've taken it down to 11%. And if you go back through time in Cameco's system, and I was there almost 25 years, that's sort of what they do when they're challenged to spread their peanut butter thin, if you want to talk about it that way. Their budget's thin, then they dilute on projects to a point where they retain certain interest or rights within the joint venture. In this case, it's a right of first refusal on an asset sale. It's not a right of first refusal on a corporate transaction or corporate sale, which is generally the case in an M&A transaction. So there's nothing limiting us from doing a deal for CanAlaska to essentially create value for our shareholders through an auction process. Nothing stopping us from doing that.
Okay. And remind us what the West McArthur budget is for this year. How much is Cameco putting up? And you've already started answering this question, but how much of that budget savings are you going to put to work elsewhere?
Well, it's 15 million, which is year over year, about I think 20% higher year over year. So we're showing a steady increase year over year for the last number of years in this project as we continue to get the results we do at Pike Zone. So $15 million, they'll contribute 11% to that. Let's use that number. So you're looking at about 1.6 million. So that 1.6 million in savings that we don't have to fund now solely, we can deploy into projects like Key Extension and Nebula. And as I articulated, we have a very healthy treasury, a lot of hard dollars in there. So we're going to use some of those hard dollars to, again, partially augment that savings from West McArthur to do even more work within our portfolio. For now, focused primarily south of Key Lake, but also paying a lot of attention to things like Cree East.
Yep. Okay. So health of your treasury, you said, is pretty good, even with this $13.5 million outlay or so. How well cashed up are you going to be at the end of the program? And I guess what happened to those warrants late last year to help you get
Yeah, we're in a very healthy treasury at the moment, 39 million roughly. As we work through 2026 with our current plans, we should land, somewhere maybe just south of 20 million in the treasury. Very healthy. So we do not have any urgent needs to come back to market. Of course, opportunistic as always, but however, we are well financed for 2026. And what was the second part of that question, David?
The warrants.
Oh, the warrants, yes. So as another, positive to all this conversation is that almost all of our warrants came in Q4. We had two batches, one at about 76 cents and the other 56 cents. Both those warrants cleared. Almost everything came in, even when the price was down around 56 cents. We had large shareholders, large blocks giving us their money and taking the warrants, believing that CanAlaska was oversold drastically. And of course, today we're sitting closer to 77. So those shareholders that had a long view have done very well. And I'm very happy about that because they showed faith not only in what we're doing and how we were oversold in the market, but they are willing to give us that money and take that risk. And I'm very pleased with how it's turned out in the last literally 1 month. So now just to put it into perspective, and again, to reiterate, all of our warrants are gone. We have no outstanding warrants within our system. Any overhang due to those warrants is now past, and we can look forward to the future and hopefully an appreciation for our shareholders and our share price as we continue to develop results from our portfolio.
Great. So a couple of questions about this share price volatility. I guess maybe give your perspective on the market sell-off late last year down to that 56-cent level. I do imagine there was a fair bit of warrant buying overhang or selling overhang, I guess I should say. But how much of that was maybe a lack of strong assays late in the summer? Maybe what's your perspective there?
Yeah, I'm going to give you my perspective. One of them you've touched on is the warrant overhang. We knew that was in front of us. We tried to manage it as best as we could. We did manage to cross a few blocks, so keep it out of the market per se. But definitely that warrant overhang was real and was present, and now is gone. So I'm happy about that. In terms of the overselling, well, we have been talking and you'll know this, for probably 2 years or more about strings and pearls. And at some point, as you finish the pearl and you move into the string. And we were very clear in the summer as we entered it, we were going to move through that string, right? We're going to start looking at the next pearl. Ideally, two pearls merge as one and away we go. Of course, that isn't always the case. And of course, we came through the summer and I would suggest we produced results that perhaps the market viewed very negatively when they really shouldn't have, because we always stated what we were trying to do, and that's move toward the next pearl. And key to note from our news, which I don't think was fully appreciated at the time, is that we believe on our western end, we were getting into the next pearl. And we tried to relate it back to what we learned over the last 2 years at our Pike Zone, where 13 meters away, we get 0.5% over a couple meters, and all this alteration and structure associated with it. And we see even better results on the western end of this 500-meter corridor in late September. And that's key to note, because we're seeing even better results than we see adjacent to the ultra high grades at our main Pike Zone coming in late September. Unfortunately, out of budget, out of time, we had to shut it down, and the market perhaps didn't appreciate that. So while we expected some, I would say, anticipated uptick of ultra high grades coming, the stuff that we produced was far from being negative, And the overselling essentially reset us to a price that's before last winter's work, which intuitively doesn't make sense. And I think our long shareholders that step back and look at that, when there's the opportunity to get into the stock at 56 cents, we never thought we would be able to do. And that's exactly what I believe happened. So we've basically provided an opportunity, in a weird way, provided an opportunity for those that following the story and into it and understand it, pearls along that string, to get in and do even better. So, we can't control the market, or we can only control it so far. So, the market determines our worth. All we can do is generate results that change that value. That's what we intend to do as we move into 2026.
Okay. I'm going to come back to the volatility in a second, because I think we still need to focus on this a little bit. And I wrote last fall, to me, it looks like you might be coming back into mineralization, another pearl on the necklace, as you and everybody else says. And this is common in the basin. How common is it?
It's very common, and I think you'll appreciate this. You can look at the Triple R deposit. Okay, 5 or so pearls along a string over several kilometers. You can look at the McArthur River, as we show and we use next door to us. Multiple pearls along a, say, 2 kilometer string with zones of nothing between them for up to a couple of 100 meters. Nothing. You'll see the alteration, you'll see the structure, maybe some trace chemistry, but you're not getting mineralization, certainly not ultra grades. In fact, we're getting better mineralization in some of our string than they do between McArthur's pearls. So look at the Sioux deposits on the Wally, on Orano's Wally project. I think that's 5 deposits.
Yeah.
You get the point.
Yeah.
Every single one of them show the exact same features, multiple pearls along the string. And when you start to get grades of 85%, 30, 40, 50%, 10%, you should be expecting that you're into a major mineralizing event. And really, the only place you find, well, not the only place, I should say, in almost every situation where you get these types of grades consistently, you get multiple pearls forming. It's a big mineralizing event. A lot of waters move through the system carrying uranium, and it's been very stable for a long period of time to get grades as high as 85%, period. That's how these chemical systems work. So to answer your question, there are many examples that look exactly like this. Multiple pearls should exist.
Okay. Now, I guess let's get back to the share price movements here. How sensitive is CanAlaska to uranium term or spot price movements? We are seeing prices starting to firm up here early in 2026. Stock has performed fairly well.
Yeah, absolutely. And you can go back and look at 2024. And the price of uranium, spot price, and term contracting went north of 100, but the spot price in particular started to spike to, I think, 104, 106. We basically doubled our market cap in 3 weeks. 3 weeks. That's no different than 20 years ago in the last cycle when CanAlaska was involved back then. I forget our market cap, but it was really high. And I think to use Sky Harbor's conversation yesterday, David. Sky Harbor indicated that their share price in the last cycle produced a market cap of $400 million. So all of us companies that are well structured, like CanAlaska, a little over 200 million shares out, fully financed at almost $40 million in the treasury. The only way you're going to play in our stock now is through the stock market or through the trading. With continued success and continued elevation of that uranium price, spot and term, it's going to be very sensitive to that price to the upside. And I believe we're seeing the signs, very early signs, that we're into another sort of uranium jump here, a step change. Because the term price now, that 5-year term price, is north of $100 a pound. We haven't seen that in quite a while. Spot price has moved up 10% in the last month. Should be talking about that. That's a big move. Up at least 10% in the last month. That's very significant, and it shows no signs of stopping. So I think there's a huge amount of upside here in a well-structured vehicle, well-financed, that's got 4 drills turning on quality assets, 3 of which are on our Pike Zone at West McArthur.
Excellent. Okay. Now, Pike Zone is what most investors are watching here. You expanded the footprint quite a bit last year. You're hoping to do that again this year, and I think there's a great chance that you will. What sort of mineralization are you trying to target at the unconformity? Are you going for massive stuff? Are you going for vein types? What are you looking for?
We are looking for the very high grade, let's call it massive for lack of better words. The higher the grade, the better. But we're looking for the McArthur River Cigar Lake type grade thickness. So, 10, 20, 30 meters, 5, 10, 15 more percent grade. True tier 1 type Athabasca Basin unconformity mineralization. 4 meters of 1%. Put it anywhere else in the Athabasca Basin, exceptional. Here, we know there's more. We know there's better, and that's what we're looking for. We need more, and the system is showing signs of more. So again, we believe we're right next door to another pod of mineralization, ultra-high-grade pod of mineralization. We're out there trying to find it right now. That second pearl, maybe third, maybe fourth, if we're lucky. It looks like it should exist here.
Mm-hmm. Okay. Now, loaded question here. A couple of questions asking if you could give us a back of the envelope estimate on how many pounds you believe you have at Pike Zone.
Well, of course, I can't. But what I would guide you toward is the analyst coverage, yours included, David, but also that of Desjardins and Cormark, that have provided their estimates on what they believe that we have. We are not in a position to release any numbers. Certainly not at this stage.
Okay, but I can. So, and I do tell everybody go check out our disclosures on the Red Cloud website. But I wrote on November 7th, we peg Pike Zone at about 45 to 50 million pounds currently, with potential for 75 to 100 million pounds with further drilling. We implore investors to buy on weakness. So that's what I wrote in early November and sort of reiterated that later in November. So. Okay, so and I wrote in the fall, looks like you might be coming back into that mineralization, and that's probably where we're going to get a lot of that upside from. So,
and I would say that last statement you made is exactly our belief, and I think that's one of the pieces that perhaps the market didn't appreciate in November, looking for a reason to sell. I would encourage them to go back and look at that and say, look, what is CanAlaska seeing in the very last drill holes of last summer? And in fact, we're seeing mineralization even better than we're seeing, and alteration even better than we're seeing 13 meters away from some of the best grades we've ever drilled at Pike Zone. That says something, and I think you're spot on, David, with your analysis that, it looks like we're getting into that next pearl. And, we have to drill it, but the signs are there, and here we go.
Yeah. Now, your signs, when you talk about signs, alteration in the basement and in the sandstones are fairly extensive here at Pike Zone. But in the basement, in the basin, it's not uncommon to go from nothing to 10, 20% in a matter of meters.
Absolutely. These are chemical systems. If the chemical system for deposition of uranium is correct, it drops out. As soon as something subtle in there shifts, it turns itself off and the uranium keeps going. And, as we've demonstrated at Pike Zone, this is one of the big learnings from 2025 as we continue to flesh out the ultra high grade, is just how quickly you go from on to off. And what you want to see is, as we've defined now, 140 meters of fairly continuous ultra high grades at that unconformity target, exactly like what you find in McArthur River, any of the zones of McArthur, that's what you see. And then, 10, 20 meters away, you're into low-grade mineralization. In some cases, a barren hole. These things are almost like Swiss cheese. So, and that's why we drill them as we do, fairly tight, because you can literally move 10 meters over and go, ugh, that doesn't look very impressive. 10 meters over, you're back into it. And when we start to see the indications on the western end of what we see exactly adjacent to that first pearl at Pike Zone, this gets our juices flowing. This gets us excited. This gets the team hopping. This office is completely empty. Why? Because they're up at site. They're anticipating those next results. And that's a good thing. A very engaged team that's just been waiting for 3 months to get back out there. And I will have to say this, off the experience in November, I will be quite upfront. Has the team motivated to get back out there? Because They just believe in what we're doing. They believe in what they see. They believe in what the rocks are telling them. And to your point, the alteration we see here is extreme. It is extreme. We've got it down, 100, 200 meters into that basement. And with mineralization and without, but when you're moving that much water through these basement rocks up into the sandstone, all the dravite that we see as a halo here, just baby blue stuff, almost the color of your shirt, David. These are diagnostic features you only find at these big mineralizing events in the Athabasca model. And that's exactly what we have. Incredibly motivated this team to go out there, drill the holes that we believe are going to move us into that next pearl. And we believe we're that close.
Okay. Next time I'm going to wear a black shirt and hopefully
well, black is good too.
Yeah. Pike Zone, even at the unconformity, is pretty deep. Now, can you maybe explain how you can drill down to those depths but keep your drill costs in check?
Yeah, we are using a mud motor. It's oil patch technology, which allows us to hit my desk at 800 meters depth, about a 2-meter window. We can hit that. It's all run in-house by our geoscientists. This is the type of technology that Orano and Cameco use to drill things like Millennium, even Cigar Lake. Actually, Phase 2 Cigar Lake was using this tool. Orano's Shea Creek deposit's even deeper than us. They use that. Now the team here, both Nathan and the senior geoscientist Bloom, have used this equipment at Cameco and Orano. So they brought it to CanAlaska. So we basically take 700, 800 meter holes and turn them into 300 or 400 meter holes, because we come up, we off-cut, and we can guide that drill bit right down into the target. So we basically turn our 700, 800 meter holes into 300 meter holes. Our cost per meter is among the cheapest in the Athabasca Basin, just north of $400 per meter. I believe you heard Sky Harbor talk about the exact same number on their project yesterday. As an example, I believe we're probably, between them and us, we're probably fairly equivalent in our drill costs. That's how we do it. And, others out there drilling in other parts of the Athabasca Basin are running $600, $700, even $1,200 a meter. And we're sitting in and around $400 to $450. So we are very, very, what's the right word? Frugal with our drilling cost per meter. And it's through the use of this technology that very few companies utilize. Very few have a need to, but because we explore at these depths, we're very comfortable doing it. And the team is very good at it. And that provides a lot of value to our shareholders. I think last year we saved 2024. I'm waiting for this year's 2025 numbers, but the year prior we saved $3 million in spend. Importantly, we put that $3 million back into target testing. And ultimately this last year we were well north of 50 unconformity tests for the 12.5, well, what turned out to be about 15 million. So we'd anticipate something very similar as we move through 2026.
Yep, efficiency is good. So,
very efficient.
Another technical question from the floor here, and I'm going to paraphrase it a little bit. During the drilling phase, how close to the deposit must the drill hole be in order for the gamma probe to pick up the uranium mineralization? So what I take this question as asking is whether gamma probes are really guiding you to a deposit downhole, or should they be considered more of a quantitative tool or measuring device? Not quite chemical assay, but certainly an improvement over scintillometer. So that's sort of what I'm getting from this question.
Yeah, so in rock, gamma doesn't travel that far because of shielding. So, if you're getting gamma radiation, you're pretty much in the mineralization. You do get some shouldering or far field effect on these grades of 85%, for instance, which is a unique situation for us to handle. As you can imagine, those types of grades do have a little bit more sort of outward shouldering to the zone, if you want to call it that, for lack of better words. But that's something that we're very adept at handling, given our Cameco and Orano backgrounds, where you've handled this mineralization. Others may not be so familiar with it, maybe misstating some of their results. But in terms of the gamma and the probing, you're pretty much in it or you're not. So does it guide us? A little, but might be things that we don't see. The subtleties, for instance, 3, 4, 500,000 counts versus something like 10,000, 100,000. Some of our probes are producing results in the several 100,000. But you have to be careful scale. That doesn't mean much. So buyer beware on the counts per second. We don't report counts per second, as you know, David. It's not something we do. We convert all of our probe data that's calibrated into grade estimates based on history and based on our database. We don't believe in producing counts per second. They can be somewhat misleading, so buyer beware. But that being said, if it's not visible mineralization, you can use counts per second and subtleties therein to help guide you to the next hole. But with the alteration we're seeing, the mineralization level that we're seeing, usually we can see it. Usually we get a sense that where we need to go next in the absence of downhole probe data.
Okay. Yeah, and thank you for not reporting counts per second. Reconcile later. So, last question, since we're coming up to top of the hour here. You are drilling Nebula for the first time that I recall, anyways. What puts that project ahead of other targets there? And is there a preference to go after basement mineralization rather than unconformity? So.
Well, in the case of Key Extension and Nebula, they are outside of the Athabasca Basin present-day margins. Now, that's a common misunderstanding, is that you don't need to be in the present-day Athabasca Basin boundary, because 1.6 billion years ago, the basin was far deeper and far more extensive. Therefore, you have to consider how far you are away from that unconformity. And we believe in the case of Nebula, we're not that far actually from the unconformity. And we know that just a few tens of kilometers away is the 200 million pound Key Lake deposit. We know that on the other side of the Athabasca Basin, where I spent 5 years at Eagle Point, it's outside the basin margins, just a little, but we don't exactly know how far from the unconformity it is. And that mineralization goes down almost 1,000 meters below that unconformity to a point. Most people don't know that. I do. I worked there for 5 years, drilled some of that deep mineralization. So thereby, we get the opportunity outside the Athabasca Basin margin to look for Eagle Point type targets. We are not, in fact, looking for unconformity targets. They'd be unconformity related targets, because at one time the unconformity was present. It's now gone. However, because of the depth of the mineralization, Eagle Point, Arrow would be another example, down to 1,000 meters, among others. There's every opportunity to find very significant mineralization at Nebula, and we believe that's completely untapped from an exploration opportunity perspective. And one of the reasons we say that is because there is maybe a half a dozen holes in and around the Nebula project. I don't believe any of which test the target that we're after. It's completely untested. And when I look at Nebula from a personal perspective and knowledge, is that sort of S shape to it is structurally what we want to see, and that it looks almost exactly in character, scale, to what we see associated with the position of the Eagle Point mine of Cameco up in the northeast. And I'm pretty excited about it, because that target came out of our geophysics, and it's like, oof, look at this thing, not touched by a drill hole at all, but yet you've got a boulder train just to the south down ice, unexplained. You've got on trend the Key Lake asset, very little testing for basement hosted mineralization along this geologic corridor, which I might add is the boundary between the Majatic and Wollaston domain, which is one of the critical elements in many ways for Key Lake, McArthur River, Rabbit Lake, Eagle Point, main deposits, all in and around that boundary. Here we are, completely untested, basement type targets, float nearby that's mineralized up to 0.35% uranium. All indications are high value target. We're going to get in there and test it for the very first time in a few weeks.
Okay, great. Well, you can't beat experience when it comes to exploration. So Corey Bellick from CanAlaska, thank you very much for speaking to us today.
Well, thank you, David. Real pleasure to be here out of the gate in 2026 with this exciting set of plans for CanAlaska and to share it with you. And again, thank you to Red Cloud for hosting us. Always a pleasure and always great to be here in early January with you. So thank you.
Okay. Thank you very much, everybody, for tuning in. A reminder that we will be back next Tuesday afternoon when I sit down with F3 Uranium. So that's January 20th at 2 p.m. Eastern. So have a great day, and thank you very much for supporting Red Cloud's webinar series.